It's June 1, and this is Business Morning. Welcome, and thank you for joining us. I'm Chimeze Obi Iwagu. We'll begin with a global oil market update as prices fall nearly 1% this morning as traders hedged bets with the Organization of the Petroleum Exporting Countries considering meeting as soon as this week to discuss whether to extend record production cuts beyond end of June. Brent crude fell 34 cents to $37.50 a barrel in the first day of trading in the contract, with August as the front month. West Texas Intermediate crude futures for July delivery were at $35.17 a barrel, down 32 cents. The price falls come after front-month Brent and WTI prices posted their strongest monthly gains in years in May. Gains were boosted by OPEC crude production dropping to its lowest in 2 decades, with demand expected to recover as more nations emerge from coronavirus lockdowns. Still, tensions between the United States and China weighed on global financial markets, while traders are also keeping an eye on riots over the weekend that have engulfed major U.S. cities. Saudi Arabia is proposing to extend record cuts from May and June until the end of the year, but has yet to win support from Russia. Algeria, which currently holds the OPEC presidency, has proposed an OPEC Plus meeting planned for June 9 to 10 be brought forward to facilitate oil sales for countries such as Saudi Arabia, Iraq, and Kuwait. Russia has no objection to the meeting being brought forward to June 4. And perhaps this might be of interest to bank customers, as the Central Bank of Nigeria has revised timelines for reversals and resolution of refund complaints on electronic channels. Effective June 8, 2020, when customers use their cards on their bank's ATMs and it fails, it shall be instantly reversed from the current timeline of 3 days. Also, where instant reversal fails due to any technical issue or system glitch, the timeline for manual reversal shall not exceed 24 hours. The CBN says that where customers use their cards on other banks' ATM and it fails, it shall not exceed 48 hours from the current 3 to 5 days. Our resolution of disputed or failed POS or web transactions will now be concluded within 72 hours from the current 5 days. All banks have been ordered to resolve backlog of all ATM, POS, and web customer refunds within 2 weeks, starting from June 8, 2020. And the CBN notes that key service providers in the Nigerian payment system have also committed to establish an integrated dispute resolution platform for the industry. Now, this is to enhance their payment system infrastructure and processes to reduce incidences of transaction failure. Meanwhile, the Central Bank of Nigeria has extended the time frame for the submission of the 2019 audited financial statements of other financial institutions due to the effect of COVID-19 pandemic on their operations. The other financial institutions include microfinance banks, discount houses, bureau de change, payment service banks, and primary mortgage banks. Now, all banks and OFIs are required to forward the audited financial statements of each financial year to the CBN for approval before the end of the 4th month following the year to which they relate. Accordingly, the 2019 audited financial statements should have reached the CBN on or before April 2020. However, because of the lockdown of most cities in the country due to the coronavirus pandemic, which affected the engagement of external auditors and the daily operations of all OFIs across the country, the deadline for submission has been extended by 3 months. Now, all other financial institutions are now required to submit the 2019 audited financial statements on or before July 31, 2020. The CBN says it will monitor compliance with the extended date and defaulters will be sanctioned accordingly. And the CBN's Purchasing Managers Index for the month of May declined to 42.4 points, indicating a contraction in economic activities in manufacturing, production, new orders, and other indices after recording at least 36 months of consecutive growth. Of the 14 surveyed subsectors, only the electoral equipment sector reported growth above 50% threshold in the review month, while the remaining 13 subsectors recorded declines. Now, one sector recorded increased production level, 4 remained unchanged, while 9 subsectors recorded declines in production in May 2020. Now at 42.8 points, the new orders index declined after 36 consecutive months of growth, indicating declines in new orders in May. 3 subsectors reported growth, 2 remained unchanged, while 9 recorded declines in the review month. The manufacturing supplier delivery time index stood at 65.2 points in May, indicating growth in supplier delivery time. The index recorded growth for the contraction level of March 2020. We're still talking about the manufacturing. That sector is one major sector that contributes to the nation's gross domestic product. In the first quarter of this year, the sector grew by only 0.43% from 1.24% in the fourth quarter of 2019 and 0.81% in the first quarter of 2019. The real contribution of the sector to GDP in 2020 first quarter was 9.65%, lower than the 9.79% recorded in the first quarter of 2019, but higher than the 8.74% recorded in fourth quarter 2019. The sector is one of the sectors that has been adversely affected by the advent of COVID-19. Now, to give us a better understanding of how businesses in this sector are dealing with the current situation is the Acting Director General of the Manufacturers Association of Nigeria, Mr. Ambrose Oruche. Thank you very much, Mr. Oruche, for joining us on the show.
Thank you for having me.
All right, let's begin with the latest PMI numbers from the central bank now that showed that the manufacturing purchasing managers index, of course, is on the decline, 42.4 in May from 51.1 in March. But what do these numbers really mean to you?
Yeah, that shows that the operation of manufacturing outfit within the month of May was not as it ought to be, because it was also has some challenges that comes with it. You will understand that the May was May 4th, the easing down started in some states. But that notwithstanding, the forex to import raw materials were not available at that particular time. You will understand that central bank lifted the sale of forex to SMEs much later in the month of May. So the figure actually depicts what is going on in the manufacturing sector, because many of them are yet to take off because of the limited time they have to operate given by government regulations.
Mm-hmm. All right, now, still talking about the latest data, the GDP number, of course, came out last week, and the manufacturing sector only grew by 0.43%. Yes. That's lower than what was recorded in the fourth quarter. In the fourth quarter, we had 1.24%, which was really fantastic. So I don't know, what do you think contributed to that fall we saw? I mean, I don't want to attribute it to the COVID-19, because we only started the lockdown around March. Yeah.
You'll understand that the fourth quarter has a lot of activities going on. It's the end of the year. It's a seasonal sales. You will understand that's Christmas period. A lot of activities went on in the manufacturing sector. That's why it grew that much. But in the first quarter, activities slowed down, coupled with the fact that some countries started experiencing COVID in the month of February, and then slowed down the export of raw materials. And that's also affected the operation of manufacturers.
We're talking about the supply chain disruptions here now from China.
Yes, and not only China, India, and even Europe were also facing some challenges at that period, in month of February and March, beginning of March, before Nigeria joined at the tail end of March.
Okay, so what changed for you after the advent of COVID-19?
Well, it is after the advent, although we are still in it, because many companies have not start their businesses. Yeah. Because if the operational time given to us by government is 9 to 3 p.m. It's not all manufacturing will operate within that time frame, because to start your machine and then to also put it in operation requires some time, And so what it means now is that we need to begin to think of new way of doing business. We shouldn't be depending more on imported products. We need to think more of backward integration. And that's why I give kudos to Central Bank on what they're doing in that regards. If it is sustained after COVID, I think we would better off for it, you know.
Now, how much of these backward integration that you talked about have your members, tried to implement? Because the central bank continued to, speak about manufacturers, businesses trying to look inwards. How much have your members adopted this backward integration policy?
Yeah, when you look at it sector by sector, you will see that cement sector started major backward integration. That currently now, I think, if I'm not mistaken, statistically, they are having more than 90% sourced locally. Central bank has also come out with policy during the time of recession, I think, in 2017, banned some products from Forex.
Yeah.
Most of those products, their users, the manufacturers that use them are thinking of how to backward integrate. Central Bank also has come out with 1 trillion naira loan to assist companies that wants to go into backward integration. Before COVID, Central Bank has had meeting with dairy products to see how they can backward integrate in sourcing of milk locally, and it has started yielding.
How far have we gone with that?
Before then, many of them has even invested so much in backward integration,
Okay.
which I'm aware of, before Central Bank came in, to support them. And I think they are also doing that. It's not something that can be done over a period of 1 year. It requires time, because others that are self-sufficient in milk stays more, has a lot of time to do that. So we cannot just abridge our own and expect it to happen overnight. No. So it's something that with consistent policy monitoring and implementation will get there in mix of sufficiency.
Right. You talked about the monies announced by the central bank, in the course of this COVID-19 to support businesses. Of course, most of those businesses, both for the 50 billion naira, the 100 billion, all fall into manufacturing, basically. So how much of these, I know that some people have complained they've not received, but the central bank, of course, says they have, released certain amount of money. What feedback are you getting from your members?
Well, some of them that applied, especially the 50 billion SME and household funds, they have received. The 100 billion meant for health and pharmaceutical. I don't know how many of our members have applied to that. 1 trillion, the conditions are not yet released, and I think the Central Bank is working on that condition. But 50 billion, yes, many are assessing, but the challenge many of them has is converting that naira to Forex in order to buy equipment needed or raw materials needed for their production has been a major challenge.
That's the issue in the currency market. But before I take you on that, yes, you did mention supply chain disruptions as part of a challenge that this sector is facing. Then what about the distribution of goods to the final consumers?
Yeah, before COVID, there was no issue with distribution. But during the time of lockdown, we had a lot of challenges in moving goods. Yeah, fortunately, we were having a meeting with Federal Minister of Industry, Trade and Investment, and then through them, and then also Governors Forum, we were able to get permission for our members in essential products to move their consignments. But after the gradual easing out, a lot of states restricted movement into their states. And then when our president announced interstate lockdown, we thought the essential product would have easy access. But unfortunately, there's restrictions imposed by those manning the what I may call checkpoints, in interstate borders. They demand gratification. Some has even a stated amount that you have to pay for your truck to pass. Some are you bargain before you move. This is across all the states. From the information I received from our branch executive secretaries that cut across all the states, the same thing happens, even currently going on.
And perhaps that's the reason we have this long traffic every day with some of your members carrying their trucks and the containers, you know.
At the borders, at the state borders, you see a lot of traffic hold up because the soldiers or the police there wants to be settled before the consignment will move.
So have you tried to perhaps discuss this issue as an association to take up this issue with the people concerned, the government concerned?
Yes, the states affected, most states affected are discussing with their state governors to ensure easy passage of goods and services so that it can reach the consumers, you know. But some are not yielding. You know, some are saying that the issue of security is not in their hands. It is beyond them. It is federal government issue. So we are also discussing with Federal Minister of Industry, Trade and Investment because that's where we are going to report on this issue. And I think they also, even Governors Forum also, we have also led a complaint to them regarding the movement of goods within these states. And hopefully something will be done.
All right. Now, I mean, the lockdown or the interstate lockdown, of course, is meant to help in curbing the spread of this virus. Now, what's your position right now? Do you think they have to let go, you know, let the road keep flowing? And I don't know, what's your position on this?
Well, my position will be that we should not kill business because of COVID and come back and face a worse disaster than COVID. In as much as COVID is for health challenge, you know, we should allow business because before COVID there was business. After COVID there will be business. So if we kill business because we are fighting COVID, what happened after COVID? Unemployment rate will be so high. We are talking about security challenges. And the only way we can get that security challenge resolved is to create jobs. If the citizens are not getting jobs, then they have other means to survive. How would they survive? By taking up arms against law-abiding citizens. So we need to think about it. We need to adopt other measures. It's not working. You can see currently we are 10,600 or so yesterday. If the lockdown is working, the increase in the affected virus citizens will not be there. But it looks like it's not working to me. I think we should adopt other means. You know.
All right, just a quick one. Of course, you know that the present administration, of course, is marking its 5 years in office. What would be your scorecard for this present administration in the area of ease of doing business, infrastructure in relation to your sector?
Yeah, for the ease of doing business, I think I'll give them a good pass mark because knowing where we are coming from and where they have taken us, I think we have made 39 points jump within that period. Is something that one should celebrate. But, you know, in terms of infrastructure, there are efforts that are going on. Everyone is seeing it. But the challenge they have is paucity of funds because this is not they are making because the oil prices are beginning to drop. But we are thinking about why not find a way around it by allowing private sector to finance this infrastructure. You'll see what is going on between Apapa and Tollgate, where Dangote Group is involved. The project is going on where government is not spending money on it. The same thing can be replicated in other infrastructure development to get private sector to partner with them to be able to develop this infrastructure. This will also help us not to borrow much. We are borrowing. There's nothing bad in borrowing, but
it's what you use the money for. Absolutely. Now, what about in the area of taxation?
The taxation, we have been asking, part of stimulus package we recommended to government is to see how we can reduce the taxation to enable companies that are struggling to survive due to this COVID to be able to pick up. We also are appealing to them to give tax holidays for investors that are a more extended tax holidays for investors that are going to more of research and development to be able to backward integrate. You know, we are yet to hear from them.
Hopefully you will get a positive response.
Yes.
Hopefully. Thank you very much, Mr. Ambrose-Ruche. Mr. Ambrose-Ruche is the Acting Director General of Manufacturers Association of Nigeria. I will take a quick break, and when we come back, we'll look at the credit market as there are fears that non-performing loans may be on the rise. To stay with us. Until the advent of COVID-19, the loan deposit ratio of 65% requirements in the commercial lending space had forced Nigerian banks to lend more to the public. The regulation came on the heels of the emergence of online credit agencies that engage in aggressive retail lending to the public in a competitive manner with the commercial banks. As a result of the outbreak of COVID-19, however, loan default across the retail and corporate segments of the divide have surged, a development that has pressured ratings agencies like Augusto & Co. to review upward its earlier forecast of 9.4% non-performing loans ratio to 13% in 2020. Now, joining me now to paint a clearer picture of the status of non-performing loans is the Chief Executive Officer of Credit Registry, Jamila Sharif Ayedu. Thank you very much, Jamila, for joining us.
Thank you very much.
So how much of disruption has COVID-19 brought to the credit space lately, and what are credit bureaus like you learning about this pandemic?
Yes, so first of all, thank you so much for having me this morning. I believe the one thing, there's like over 6 million cases that have been reported for COVID-19 around the world globally, and we see about 400,000 deaths. And so Nigeria has been impacted as well. There's been about 9,000 cases reported to date in Nigeria, with about, I think there's about maybe like 300 or so that have passed away as a result of that. So this pandemic has seen the country as well as globally, it's impacted us medically, but it's also impacted us economically as well. So we've been able to see, like just over the last period, where there was an increase in the number of loans being given in the first quarter of 2020 compared to 2019. Between the months of March and April, we've seen a drastic reduction. We saw an increase between that first quarter from last year of about, say, 72% loan assessments. And just between those 2 months, between March and April, that reduction has been about 50% or more. And this is, partly because there was a lockdown in the government. And so we saw that people were actually leaving their jobs, the banks were closing, a lot like that. But we also realized that in general, due to that loss of jobs, people have just not been able to afford to get those loans.
Yeah, we saw until COVID-19, the 65% LDR regulation for banks, increased. What has the pandemic changed in default rates?
Right. Interestingly enough, the Director of Financial Policy and Regulations has actually re-emphasized the need for lenders to maintain that 65% LDR. Now,
but don't you think that would actually impact on their balance sheet eventually?
Yes, I think we have to be very careful with this, but I know that the central bank has also put in measures and supported with new policies to be able to help lenders not only continue to open their banks up for access to credit, but they've also encouraged them to do things such as restructuring of their loans, to reduce the interest rates. They've even introduced, if you will, intervention funds to be able to support that, so that the banks can be able to extend, if you will, access to credit to more people. That is important, though, if you think about it. I mean, the economy can only be as strong as people being able to continue to be employed, and companies can only continue to be open to support those employees if they have access to credit during a time like this.
Talking about restructuring the loan, of course we had Sterling Bank, for example, had to have its loan restructuring fees for new and existing loans. How do you think such development will help to moderate the non-performing loans?
Right. In fact, Sterling Bank, and there's a few other banks, UCGTB, Standard Chartered, Stanbic, Zenith, a lot of them have put in these moratoriums, or should I say payment freezes or payment holidays to support those borrowers that are already on their loan books. And I think that's incredibly important because, this is not something where you have an unwillingness to pay. They just have an inability to pay potentially at this time. And so that's going to be important so that non-performing loans are not being reported to the Bureau as non-performance, because that's going to impact someone's future credit capability. So we are strongly encouraging lenders to allow for that so they don't have to report their customers as non-performing.
So across the online retail lending ecosystem, how has the rate of loan default affected those fintech?
Yes, so I tell you that fintechs, they're not regulated by the central bank. I actually believe that that's probably not so bad because they're very innovative. They are willing to take some of those risks that a regulated institution is not necessarily able to take. However, it does leave them very susceptible and vulnerable in that they are not all reporting to a credit bureau. The banks have our institution as a huge way to help them be able to curve, if you will, to curve defaults. And we're saying that the fintechs, you have that same capability. We empower you. We actually encourage them to report their loans, even if they're not, of course, deposit giving or anything like that. They need to report their loans, good and bad, to protect that whole ecosystem that they're now a part of, because customers, they're free agents and they can go anywhere. And
Absolutely.
if you are not reporting, that means that the thousands of users that are utilizing the Bureau are none the wiser about the credit that's being given.
Now, for individuals and perhaps businesses now who had their accounts credited before March 2020 for debt settlement, for example, and at that period, check clearance, was suspended by the CBN till April, when another settlement was actually due. How did credit bureau like yours manage this situation?
Right. It's actually a very serious matter. So, because I know that consumers, we do have the ability to be able to give checks, right, in order to pay our obligations. And during that time, as the Bureau, we do collect that information from lenders. If a check has not been honored or it's a dud check, that is being reported. So I would say any consumer that has been impacted by that, call your bank. Call your bank, make sure it is addressed, make sure that that doesn't negatively impact you, because that is being reported to the Bureau, and so that will help them. We've also introduced an easy way for lenders, as well as any service provider or any, say, retailer, to be able to know if someone has written a dud check. So that way they can quickly be able to determine if they will accept any more checks from an individual. And so that also opens it up on the other side, that individuals are able to use their checks, because now there's a way to determine that I'm good with credit. You can trust me. So give me this access, especially at a time like this when I really, really need it. And so we should be able to encourage
Now,
that.
what about individuals, employees who, of course, had their jobs and perhaps were paying their loans, and now their jobs were affected because of the job cuts brought about by the COVID-19 pandemic? How are such cases being handled by credit bureaus?
So as a bureau, we don't create information or modify information that's being reported by a lender. So I encourage every employee that has found themselves in a position whereby they have lost their job to immediately contact their lender. The lender is in the business of making and generating money from giving loans. So it is nothing better to them than to have a customer call them in advance to tell them I'm having problems, because then they're at a point of being able to help. Because once it's reported to the Bureau, it is reported as non-performing if you haven't addressed that with your lender. So definitely reach out. Don't run away. It's not going to stop. It's not going to be written off. The banks are not in the business of writing off those loans, but they do expect that payment, but they will work with you as a borrower to make sure that you are not negatively impacted by it.
Well, in the midst of this COVID-19 pandemic, the central bank, of course, announced several stimulus measures, how does or how do these stimulus measures impact your activities? The interest rate on major government facilities have been from 9% to 5%, and we have moratorium on these facilities.
Yes, yes. I think that that's a great initiative. The CBN's Intervention Fund, which is actually being managed by Nassau MFB, we're trying to work with them as well to have that information reported to our bureaus. But this is a great way for the economy to continue to flow. So being able to have access for small businesses, and it's even open to individuals who have been negatively impacted somehow financially by this, pandemic. And so getting access to those funds, applying for those funds today, whether you're a school, whether you are a small business, or you are a fintech, or someone you really need access to be able to have, to grow your business and continue to sustain your business during this time, that is a great initiative. And it's being reported to the bureaus. So that's a way you can actually build your credit during this time as well.
Right. Okay, now there are this issue of collateral being required even for this emergency funding. Just wondering why collateral will be necessary at this time when we're trying to prop up businesses who are perhaps affected by this COVID-19.
Right. Now, there is introduction of the collateral registry, which allows for you to use even movable assets as collateral. And so this, again, once just protects the lenders, but also now makes it so much easier for a borrower to use what they have. People have this idea that collateral means you have to have a house or something that's more substantial, where with the collateral registry, you're able to have much, what you have available, whether it's your motorbike, whether it's, access to some asset that you have in your home, jewelry, things like that. And that's incredibly important because it opens up lending to more people. And that's what's needed in the market now.
All right, now looking at the first quarter GDP number, now financial and insurance were the second main drivers of the non-oil sector. Now, do you foresee any danger for the financial institutions, particularly the banks in the areas of non-performing loans? I mean, we're seeing fantastic results there, but some people are still pessimistic about what they're seeing right now.
Yeah, I think that lenders, they have to be careful, right? There's three things that I encourage for a lender to do during this particular time. One big one is to communicate. Know your customer, yes, that's one thing, but communicate to them. Let them know that there are ways whereby they will support them to get through this pandemic. It also helps that customer know that, again, they can't just run away. It's not just going to stop. This is something that is an obligation that they must do. The second thing is have compassion, right? We're in a particular, no one brought this on to themselves. So have compassion, create new ways for that customer to be able to get to the other side.
But then they have to also consider survival strategy.
Absolutely. The last one I say is creativity. In order to survive, it can't be business as normal. We have to have a new normal. The way my grandmother did banking is different than the way I'm doing banking, is also very different than the way even my children are doing banking. So being creative, yes, the restructuring is fine, but one thing I put out there is say, I think banks should actually consider doing some form of loan consolidation. You have consumers who are having loans in multiple places for different reasons. Either their salary is in this one, so they have to take their loan from here, but they've taken maybe a fintech loan, and now they're trying to manage many loans at once at different interest rates. If they're a great customer of yours, help them consolidate that, especially at this time. That way they'll have one payment that they can be able to get at, hopefully at a better interest rate, and then be able to maintain and be able to pay off that loan much more quickly and easily.
Right. Now, post-COVID-19, what is likely to change about the way credit bureaus handle debt and repayment records?
Yeah, for us, I think there's a few areas that we're going to change in. I mean, I think one is just being more vocal and bringing more awareness that a credit bureau is meant for more than just the banks. We're actually open for business for many areas or sectors. We work with telcos, utilities, small businesses, real estate, and and so we say that if you are in the business of giving access to credit or services, you should be reporting that to the Bureau. The second one is that ensuring that our clients are taking advantage of technology. We have APIs that allow for them to do more digitally, have their customers be able to reach them literally online. And then the last one is scoring. We believe that credit scoring is the area that's going to help lenders to be able to grow their portfolios, thus minimize the risk without just having a few people with bad loans. If you have more customers with good loans, it's going to be able to balance out those who are unable to. And so they're going to need scoring, credit scoring, to be able to do that. So those are the areas we're going to do. So, yeah.
All right, thank you very much, Jamila, for sharing your thoughts.
Oh, it's my pleasure. Thank you so much for having me.
Jamila Sharif Ayedu is the Chief Executive Officer of Credit Registry. Well, just before we turn to Temple, let's go back to the global oil market there as prices fall nearly 1% this morning as traders hedged bets with the Organization of the Petroleum Exporting Countries, considering meeting as soon as this week to discuss whether to extend record production cuts beyond end of June. Brent crude fell 34 cents to $37.50 a barrel in the first day of trading in the contract, with August as the front month. West Texas Intermediate crude futures for July delivery were at $35.17 a barrel, down 32 cents. The price falls come after front month Brent and WTI prices posted their strongest monthly gains in years in May. Gains were boosted by OPEC crude production dropping to its lowest in 2 decades, with demand expected to recover as more nations emerge from coronavirus lockdowns. Still, tensions between the United States and China weighed on global financial markets, while traders are also keeping an eye on riots over the weekend that have engulfed major U.S. cities. Saudi Arabia is proposing to extend record cuts from May and June until the end of the year, but has yet to win support from Russia. Algeria, which currently holds the OPEC presidency, has proposed an OPEC Plus meeting planned for June 9 to 10 be brought forward to facilitate oil sales for countries such as Saudi Arabia, Iraq, and Kuwait. Russia has no objection to the meeting being brought forward to June 4. And perhaps, again, this, of course, I'm sure is of interest to bank customers, as the Central Bank of Nigeria has revised timelines for reversals and resolution of refund complaints on electronic channels. And effective June 8, 2020, when customers use their cards on their bank's ATM and it fails, it shall be instantly reversed from the current timeline of 3 days. Also, where instant reversal fails due to any technical issue or system glitch, the timeline for manual reversal shall not exceed 24 hours. The CBN says that where customers use their cards on other banks' ATMs and it fails, it shall not exceed 48 hours from the current 3 to 5 days. Okay, and for last week's market review, here is Temple Ashaju. Well, Temple, it was positive last week. Hope that continues this week.
We do hope it will continue this week. It was completely positive by some 0.25%. We've got the 20.25% gains for the entire week, which is short circuit by some public holidays, coming in at 32 billion naira by way of addition to what we had in the equity capitalization of the market. That's 32 billion naira. And of course, that moderated the year-to-date losses to some 5.9%. And the month-to-date performance continues to actually wax stronger. Now, if you look at the activity level, volume of transaction was really helped by some 318.7 million units of shares traded week on week on the share price of FBN Holdings. You also got some 161 million naira million units of shares traded across the shares of Zenith Bank, then Guaranty Trust Bank, all contributed to what you have here. Basically, these jumped by some 32%, and of course, this was higher by some 41% in terms of value. We've got Mr. David Adonri, who is a stockbroker with High Cap Securities, joining us on phone. Mr. Adonri, thank you for joining us on the program this morning. But over the weekend, we got a notice from UBA, which is a listed company that has actually been doing well, contributed to some of the gains that we saw in the market last week. It notified investors about early call of its 7-year bond, which was issued in December 2014. Talk to us about how that will impact on the price of this particular company today and this week going forward.
Okay, thank you very much, Temple. It's my pleasure being with you this morning. The early redemption of the 7-year bond issued by UBA is a wonderful development, indicating that at least within the corporate bond segment, an enterprise has the capacity for early redemption of its issued instrument. So
well, will that change anything in the price of the stock?
Yes, but this is the principal issue really, because it's an exercise that is meant to strengthen the bottom line of the company. But although it may not be a very, very interesting thing for the investors, because the rate, the yield of the bond is actually 16% and above, and now the yield in the bond market has fallen.
Okay.
So it does make sense for an enterprise to redeem his bonds before maturity, so as to take advantage of the reducing interest rate in the system.
Okay, thank you very much, Mr. David Adonri, for that insight. Mr. David Adonri is a stockbroker with High Cap Securities, a member of the Nigerian Stock Exchange. Chimeze, I bet you know that.
Absolutely. Anyway, hang in there. I'll get back to you.
Sure.
We'll do an opening call to London, of course, as well as the debt and currency market after the break. It's early Monday call to London. Let's talk to Juliana Lanka. Hello, Juliana. Good morning. So what's the street of London looking like today as more businesses open shop?
Good morning, Chimeze. Well, I've got to say, it's certainly much busier in London than it has been since the start of lockdown, which is, gosh, almost 3 months ago. Of course, last week, Prime Minister Boris Johnson added new measures which would ease the lockdown. In fact, this is now the greatest ease in lockdown we've seen since March the 23rd. So today, thousands upon thousands of children are returning to school between certain ages. Of course, there are still some school children that are not returning because of the rate of the virus and how it affects certain areas. There are certain regions that are doing things at their own pace. But we are seeing car showrooms open today, as well as open air markets, which are pretty popular in certain areas of London. There have been some reports from the media that are checking with market stall traders to see how busy business is. And that's really what a lot of people will be keeping their eyes on, just the footfall and how many people are brave enough to go back on the streets, because there are some suggestions that amongst every other nation in the world, people in Britain are the most coronaphobia. So Boris Johnson will be keen to get people out in the economy again so we can keep the wheels turning.
More than 200 top UK firms and investors are calling on the government to deliver a COVID-19 recovery plan that prioritizes the environment. What are they proposing, and why is this important at this time?
Well, the climate change emergency has been important for several business leaders, particularly for Britain, who like to consider themselves one of the world's leading when it comes to trying to battle the climate change emergency that we're in. And it's clearly undeniable that since the world has been in lockdown, that emissions have drastically been reduced. So there has been this open letter written to ministers by businesses such as Lloyds, Siemens and others. And they're asking the government, so whilst they're unlocking the economy, to stick to the climate change initiatives, as well as investing in more greener practices at work and within the environment. They've also asked the government to be a little bit more tougher on some businesses when it comes out to giving loans. We know that over the past couple of months, airline bosses or airline carriers have received billions of pounds worth of support, as well as millions of pounds to keep their staff furloughed. And these business leaders are saying that if you are going to be giving any more taxpayers' money to these companies, there should be strings attached to these bailouts, and that should be keeping your environment more clean and safe. So they say that we should use this as a springboard, all this fresh energy that's pumping into the ecosystem at the moment, to sustain it while we're keeping up with climate change initiatives.
And manufacturing industry leaders have called on the government for an emergency bailout as the coronavirus outbreak forces factories across Britain to an effective standstill. But how much more can the government carry this burden with spending already high in COVID-19 crisis support?
Gosh, how much? Well, I think Chancellor Rishi Sunak and Prime Minister Boris Johnson said in their own words at the start of the lockdown that it was whatever it takes. And that's clearly what Britain have tried to do, even if it is going to cost them billions of pounds. We've actually just had the manufacturing PMI figures for May in Chimeze, which was 40.7. It was 32.6 in April. And of course, those PMI just tell you what the state of the health is for that particular sector. Anything below 50 represents a contraction in output, and manufacturing is clearly in trouble. Make UK, who are the body responsible for about 100,000 businesses, last week they actually said that 1 in 4 businesses were afraid that over the next 6 months they will have to make mass redundancies, and many of them don't think that they'll be able to survive, which is why today they've urged the government to put in extra measures to make sure that the industry can stay afloat, particularly as manufacturing, of course, is so important to the British economy. Last week as well, we had some data from car manufacturing showing that it had plummeted in April by 99.7%. Typically, you'd have 400,000 cars made in a month, and there was only 197 made. So it shows just how severe this crisis is. And there are some suggestions that perhaps there will be a budget, maybe not another bailout, but a budget by the Chancellor sometime in the summer to try and keep the manufacturing industry afloat. But yes, whatever it takes could cost the government a lot more of its GDP, but manufacturing says it so desperately needs it.
Anyway, I'm sure you'll give us more update on that PMI numbers there, and of course some other developments out there today. Thank you, Juliana. And back here on the debt and currency market, Temple is back on board.
Yes, Chimeze, these are numbers for last week, Friday. Specifically, we've focused on bonds on this aspect, where we saw that there was a serious decline in terms of yields last week. Basically, week on week, we got some 9.72% decline for the numbers that we have on these papers represented at the across the markets, the Nigerian Stock Exchange, and of course, the FMDQ Stock Exchange. But basically, the 23rd of March 2025 paper was down the most. It plunged by 118 basis points only last week. I mean, that's where a lot of interest was actually. But if you look at this end of the market, it was more of a sell down so that investors can check this side of things. But on the average, yields came in at 9.72% last week after some investors actually looked at that paper. So we've been seeing more of cherry picking in the market lately. We've got the NCB space now, where there was a decline on average by some 25 basis points week on week out of the 3 week trading session that we had last week. And of course, these are figures representing what we saw on Friday for the OMO space, just 6 deals, because again, a lot of investors, dealers and treasurers went to the open market operations auction by the central bank, which was carried out last week. But we have Bosun Obembe, who is an FX dealer with Access Bank, joining us right now to look at some of these numbers. Bosun, thanks a great deal for coming through on the program. Specifically last week, some 281 basis points caught to 9.9% on the 1-year OMO bill, and that was at the auction that held by the CBN carried out. I mean, we understand that that was the biggest cut this year so far, from January till date. But what does that tell you about further auctions?
Good morning, thank you for having me. So at the last week OMO auctions, if you notice, throughout last month, I think that was the only auction where CBN actually sold something into the market. So the earlier auction, there was no sale. So, and before the auction, if you look at the 1-year paper, it's already trading at sub 10% level. So we're still trading at between 7 and 8%. So the drop in yield is not something unexpected, because technically, market is comfortable buying at 8%, 9% level. So that was why the drop came. And it's not only on the 1-year paper. If you look at the 180-day and the 82-day, on the 180-day, we have 279 basis point drop. And if you look at the 82-day B2, that about 400 basis point drop. And looking at the B2 cover, why the significant drop coming from the long end, the B2 cover is about 6.8. So a lot of people trying to take advantage of the OMO auction because nobody knows when CBN is going to conduct another OMO auction. Because this month we have just a few majority, so it's just for people to actually take a balance their position. That was like that. You have saw that 9.9, and if you look at the EDP about 10.5, yes, which is okay. Is okay.
All right, Bosso Bembe, FX dealer with Access Bank, thank you so much for sharing your insights with us, and we do hope you have an FX profitable trading day.
All right, Temple, I'm sure you're done with Bosso, and we wish them a profitable trading day as well here. And that's it on the program for today. Thank you for watching. I'm Chimizi Obi Iwagu.